How is everyone doing today? Welcome back to another episode of The Banker Next Door. I'm your host, Dr. Joe Berquist. So today I wanted to talk to everybody about a brand new SBA lending program that was just announced last week. And this is going to be referred to as the 7A, what is known as the Manufacturer's Access to Revolving Credit, or the MARC. Loan program, which is very interesting. So this is going to be a sub-lending program underneath what is known as the SBA's flagship lending program, otherwise known as the 7A loan program. So this will be under that flagship program, as it were. And we're going to look at three things today. So the first thing is I want to take a look at the official press release from the SBA talking about the loan. We're going to take a look at what's called an SBA procedural notice regarding the loan. And we're going to take a look at an article from the business journals as it relates to this program, just to give everybody some information on this. Now, I think this is an absolutely fantastic new program that has just been launched by the SBA here. So let's read this. So SBA launches first ever loan program dedicated to American manufacturers. So MARC loans will expand access to credit lines that create jobs, onshore production, and support the return of industrial dominance. So today, and this is from September 3rd, so September 3rd, 2025, so the U.S. Small Business Administration launched its first ever loan program dedicated to supporting American small manufacturers, which make up 98% of all U.S. manufacturers. The 7A Manufacturers Access to Revolving Credit, or MARC loan program, will offer working capital for small businesses engaged in manufacturing, specifically designed to provide maximum flexibility and minimal red tape. With 98% of American manufacturers classified as small businesses, the new MARC loans represent a powerful source of targeted capital for those who are growing our nation's production, said SBA Administrator Kelly Loeffler. The SBA is working alongside President Trump to rebuild our industrial dominance by empowering small businesses to bring back Made in America. For decades, our manufacturers and workers were crushed by bad trade deals that outsourced American jobs, supply chains, and strength. Thanks to the America First agenda, we are building again. And this working capital program will empower manufacturers to create jobs, supercharge growth, and reshore American industrial might. The MARC program expands SBA's portfolio of loan programs by adding a new source of liquidity for small manufacturers while offering lenders maximum flexibility to structure working capital loans. This provides more options to meet businesses' unique working capital needs. So MARC lines may be structured as either a revolving line of credit or a term loan. The MARC is positioned to help growing manufacturers access flexible working capital as they scale their operations and take on new customers. Loan funds may be used for any short-term working capital need of the manufacturer, supporting everything from inventory purchases to new projects. MARC lines of credit can help manufacturers expand their working capital by leveraging the available equity of their existing facility or equipment. The MARC program complements the SBA's core 7A and 504 loan programs, providing a flexible new line of credit to manufacturers and lenders. MARC loans can be used in combination with SBA and conventional commercial loans, making it a potent new tool in support of the administration's effort to reshore American industrial dominance. Under the leadership of Administrator Loeffler, the SBA previously announced its Made in America manufacturing initiative to empower small manufacturers with the tools to lead the nation's industrial comeback. As part of this initiative, the agency has committed to cutting $100 billion in red tape, promoting workforce development, and doubling the 7A and 504 loan limit for manufacturing. More recently, SBA also launched its Make Onshoring Great Again portal, a free tool designed to connect small businesses with a database of more than 1 million domestic suppliers and producers. So complete details on the new MARC loan program will be posted at www.sba.gov. Training for SBA lenders can be found in the training portal. So again, so there you have the basics. Now let's take a look at the SBA procedural notice here. Now, whenever the SBA makes changes or put things out, they always put out what's called the SBA procedural notice. Now, most of the time, most people will not see these, even though you can find these simply by Googling them. And I do have a link to the press release I just read and this procedural notice, links in the description down below for both of these items. But again, most people never see these. These are basically just for bank lenders that get this. So So the purpose of this notice is to supplement the SOP, which is what's called the standard operating procedure. So SOP 50.10.8 with procedures facilitating access to revolving credit for manufacturers. Loans made under these procedures are available only to eligible small businesses that meet the eligibility requirements in the SBA 5810 Section A and engaged in manufacturing. So these loans will be referred to as 7A manufacturers access to revolving credit loans. MARC loans are a new 7A loan delivery method, not a modification to the existing 7A working capital cap lines or SBA express delivery methods in the SOP. MARC loans contain features of both standard 7A term and SBA Express revolving loans. MARC loans may be term or revolving. They are underwritten like a standard 7A loan, and the monitoring requirements are similar to those of SBA Express loans. For revolving loans, the lender must conduct an annual review of the borrower's financials. If the results of the annual review are unsatisfactory, the line must be converted to a fully amortizing term loan with a zero balance at loan maturity. Once the loan has been converted to a term loan, the lender may not make further disbursements on the line. Now, let's go down here. So let's see a couple of the items here. Now, and this is the key thing I kind of wanted to get to. So 7A MARC loan terms include, but are not limited to the following. So a maximum loan amount of $5 million. Maximum guarantee percentage for the bank is 85% for loans of $150,000 or less. 75% for loans greater than $150,000. The loan maturity. So revolving loans may have a maturity of up to 20 years, 10 years revolving and a 10-year term. Term loans may have a maturity of up to 10 years. Now, it's important to note that this line of credit that you may get, it's not what you would call an evergreen line of credit, meaning it does not last forever. You basically take this loan out and you basically get 10 years. It becomes a 20-year loan, of which 10 years will be revolving, but after 10 years, it automatically converts to a fully maturing term loan. So again, you might have to, do some stuff after 10 years if you want to keep it as a revolving loan. You might have to pay it off or refinance it with another revolving loan. But I don't want to get too far into the weeds on that. I just want to make people aware of how that ultimately works. Underwriting, actual or projection-based debt service coverage equal to or greater than 1-to-1. If based on projections, must break even within 2 years from first loan disbursement. So that is very important for startup businesses. So if you are a startup company, or if you're a company that's maybe been in business for 3, 4, 5 years and you're trying to get it going, and you think that the money is going to maybe help you start a new product line or just, increase capacity and growth and will lead to a lot of profitability, and you could base that on projections, that obviously will really help. Collateral, at a minimum, the lender must place a lien on all business assets with exceptions for vehicles and trading assets. Annual review of financials is required. Lender fees. So in addition to the fees in the SOP 50, Paragraph 2, at the time of annual review, the lender may charge up to 50 basis points annually, calculated based on the maximum loan amount. If treating the loan like an asset-based line, lender may charge an extraordinary servicing fee, but not also the 50 basis points. So, and then for PLP lenders, so lenders with PLP delegated authority must process all MARC loan applications using their PLP delegated authority. So, and then let's quickly here just take a look at this article that was written in the business journals. And this was titled, SBA is waiving many loan fees, but only for one industry. So the SBA, so Small Business Administration, is waiving most loan fees for manufacturers. The latest perk it has rolled out for that industry. That means for 7A loans, 7A MARC loans, up to $950,000, the upfront fee will be 0%. For all 504 manufacturing loans, the upfront fee and annual service fee will each be 0%. These new reduced fees will go into effect starting October 1st, 2025 and run through September 30th, 2026. So that basically means it'll run through the next fiscal year for the government. But that is amazingly enticing. So what's great here is that, banks, again, if I go back here, banks could basically get a 75% guarantee for loans above 150. So say you did do a loan up to 950,000, banks could get that 75% guarantee. But for the borrower, what's really enticing is that you will have zero fees for this. 0 fees for the 7A loan or 0 fees for a 504 loan, which is just absolutely fantastic. The waiving of some loan fees is a partial reversal of SBA's efforts to reinstitute fees for a wide variety of its loan products. On March 27th, the SBA reinstated higher fees the SBA had traditionally imposed or allowed before the onset of the COVID-19 pandemic. So why? Well, the program was in the red as loan fee dollars dropped and loan defaults increased. Those findings and others came from a detailed risk assessment by the SBA of its 7A portfolio through June 30th of 2024, obtained by the Business Journals as part of the Freedom of Information Act request. But the carve-out for manufacturers doesn't end at higher fees. The SBA recently rolled out the 7A MARC loan program to offer working capital for small businesses engaged in manufacturing that the agency said would provide maximum flexibility and minimal red tape. The program does take effect on October 1st. The MARC loan limit, like we said, is $5 million, with the SBA guaranteeing 85% of loans up to $150,000 and 75% for loans above that to the maximum. The SBA and the Department of Labor in July announced a memorandum of understanding that would increase cross-collaboration to help support manufacturing. That means connecting the SBA's capital and contracting tools with the Labor Department's workforce development infrastructure. The agreement calls for the agencies to expand data sharing and coordination on programs such as DOL's Registered Apprenticeship Program and the Veterans Employment and Training Service. The SBA likewise will offer cross-agency training on loan programs to support manufacturing, including its 7A and 504 loan programs. So again, great stuff here with this. I am really excited about this loan program. I really can't wait till this kicks in on October 1st. I think this will be a great thing for anybody out there, manufacturing anything, as it were. So, I mean, but this is a great thing, great to keep its eye on. Again, if you know anybody that has a small business that manufactures anything, or if you know anybody that's looking to start a small business that's going to manufacture any kind of product, definitely pass this video on to them, have them take a look at this. Hopefully it will provide some good information and lead them back to obviously the SBA at sba.gov. So, but with that being said, I hope you liked this episode today. Please make sure to like, share, and subscribe, as that always helps the channel. Remember, we are on YouTube, Rumble, and all major podcast platforms. Please be sure to leave your comments down below, as I always love getting back to everybody. And as always, make sure to check out some of the other content on the channel. I thank everybody for listening. Have a great day out there, and I will see you again real soon.